In the fast-moving world of digital finance, one name has quietly grown to wield the power of a small nation. That name is Tether. It issues the world's most popular stablecoin, known as USDT. Think of it as a digital dollar. For every USDT in circulation, Tether promises to hold $1 or an equivalent asset in its reserves. This simple promise has turned Tether into a cornerstone of the cryptocurrency market. It provides a stable harbor for traders, a safe place to park their money amidst the wild price swings of assets like Bitcoin and Ethereum. This stability is the key to its success and its ever-expanding influence. So, what exactly is a stablecoin? Imagine you want the benefits of digital currency, fast global transactions without a traditional bank, but you don't want the risk of your money losing half its value overnight. That's where stablecoins come in. They are a special type of cryptocurrency designed to maintain a fixed value, most commonly pegged to a major world currency, like the US dollar. People trust USDT because it acts like a reliable bridge between the old world of government-backed money and the new world of decentralized finance. It offers the speed of crypto with the perceived safety of the dollar. This trust has propelled Tether to the top. It has become the go-to digital asset for millions of people around the globe, especially in countries where access to US dollars is difficult, or where local currencies are unstable. By using USDT, someone in Argentina or Turkey can effectively save and transact in dollars, protecting their wealth from runaway inflation. It's a practical solution to a very real problem. Tether isn't just a tool for crypto speculators, it has become a vital financial lifeline, a digital dollar that works for a global audience operating 24 hours a day, 7 days a week. This role as a global dollar substitute explains why Tether's reserves are so critically important. To maintain that one-to-one peg, the company must hold a massive amount of highly stable, liquid assets. And what is considered one of the safest assets on the planet? US government debt, also known as Treasury securities. By backing its digital dollars with real US Treasuries, Tether not only ensures its own stability, but has also, perhaps unintentionally, become one of the most significant players in the US government's finances. The scale of this operation is now so vast it's beginning to turn heads in Washington and on Wall Street. The numbers behind Tether's financial power are staggering, and they tell a story of influence that rivals that of entire countries. As of the second quarter of 2025, Tether holds an astonishing $127 billion in US Treasury securities. To put that figure into perspective, it's more than the US debt held by economic powerhouses like Germany or South Korea. In fact, Tether has now climbed the ranks to become the 19th largest holder of US Treasuries in the world. A private company, born from the world of cryptocurrency, now holds more US debt than most sovereign nations. It's a development that redefines the line between corporate power and state-level influence. This isn't just a passive holding. Tether is an active and aggressive buyer. In 2024, the company was the 7th largest net foreign buyer of US Treasuries, purchasing a net $33.1 billion worth of American debt. This happened at a time when traditional giants like Japan and China were actually selling off their US Treasury holdings. Think about that for a moment. While established economic rivals were reducing their exposure, a digital currency issuer was stepping in to fill the gap. Tether is not just a participant in the US debt market, it is becoming a crucial source of demand, helping to fund the American government. The implications of this are profound. The United States government relies on the continuous sale of its treasury bonds to finance its operations, from building roads to funding its military. For decades, it has depended on foreign countries to buy a large portion of that debt. Now, a new and powerful customer has entered the room. Tether's demand for safe, dollar-backed assets to back its stablecoin directly translates into demand for US government debt. This creates a fascinating symbiotic relationship. Tether needs the stability of the US dollar, and the US government is increasingly benefiting from the global demand for Tether's digital dollars. This dynamic places Tether in a uniquely powerful position. If a country like Germany or South Korea decides to sell its US debt, it can cause ripples in the global financial market. Now, Tether holds that same kind of power. Its decisions on whether to buy, hold, or sell billions of dollars in US Treasuries could potentially impact US interest rates and the stability of the global financial system. A company that was once on the fringes of finance is now a central player, holding a portfolio that gives it a voice as loud as many of the world's governments. Tether's ascent has not been slow and steady, it has been explosive. The company's growth trajectory is a testament to the surging global demand for a usable digital dollar. In just the first few months of 2025, Tether added a net $7 billion to its US Treasury holdings. This rapid accumulation of assets mirrors the incredible growth in its own market capitalization. By mid-2025, the total value of all USDT in circulation had surged by 19%, reaching a colossal $162.52 billion. This wasn't a one-off event, it's part of a consistent pattern of hypergrowth that has defined the company's recent history. To understand this speed, consider the numbers from the previous year. In 2024 alone, Tether's market cap grew by $45 billion. In the final quarter of that year, an average of over $7 billion in new USDT was issued each month. This isn't just about numbers on a screen. It represents real, tangible demand from millions of users worldwide who want access to a stable, digital currency. Every time someone buys USDT, Tether must in turn go out and buy assets like US Treasuries to back it. The company's growth is therefore a direct reflection of its expanding user base and its deepening integration into the global financial fabric. This rapid expansion has significant consequences for both the cryptocurrency market and the traditional financial system. Within crypto, Tether's dominance is absolute. Its 24-hour trading volume often exceeds $80 billion, making it the most liquid and widely used digital asset for trading and settlement. It is the engine oil that keeps the entire crypto ecosystem running smoothly, but its impact now extends far beyond that. As Tether grows, so does its need for US Treasuries, making it a powerful and consistent buyer in a market that is critical for the stability of the US government and the world economy. This growth is also incredibly profitable. In 2024, Tether reported over $13 billion in net profits, largely from the interest earned on its massive treasury holdings. These profits allow it to build up a substantial reserve buffer, now over $7 billion, which further reinforces the stability of USDT and fuels confidence in its ecosystem. This creates a powerful feedback loop. As more people use USDT, Tether buys more treasuries, earns more profit, becomes more stable, and attracts even more users. It's a cycle of growth that has catapulted Tether into the financial stratosphere at a speed rarely seen before. The rise of Tether is more than just a cryptocurrency success story. It signals a fundamental shift in the landscape of global finance. When a single private entity holds more US debt than a G7 nation, it becomes by default a systemically important institution. US officials are taking notice. High-level figures, including President Trump and Treasury Secretary Scott Bessent, have acknowledged that dollar-backed stablecoins can actually enhance the global dominance of the US dollar. Instead of seeing them as a threat, they are beginning to see them as a powerful new channel for exporting American financial influence around the world. This represents a new era for money. For centuries, the flow of US dollars was controlled by central banks and large financial institutions. Now companies like Tether are creating a parallel system. They are satisfying a massive, unmet global demand for dollars in a way that is faster, cheaper, and more accessible than the traditional banking system. This is especially true in emerging markets, where stablecoins are not just a convenience, but a necessity. By providing this service, Tether is effectively strengthening the dollar's role as the world's primary reserve currency, one digital transaction at a time. The future of finance may very well be shaped by this new dynamic. As Tether's influence grows, so does the conversation around regulation. The US government is currently working on legislation to oversee stablecoin issuers, recognizing that they are too big to ignore. The goal is not to stifle innovation but to ensure that these new financial giants operate with the same transparency and security as traditional banks. A well-regulated stablecoin market could cement the US dollar's supremacy for decades to come, leveraging private sector innovation to achieve public policy goals. Ultimately, Tether's story is about the intersection of technology, finance, and power. It demonstrates how a digital asset, backed by the full faith and credit of the US government's debt, can become a global financial force. The company's massive treasury holdings are not just an item on a balance sheet, they are a symbol of a new world order, where the lines between nations and corporations are blurring. As we move further into this digital age, the role of entities like Tether will only become more critical, shaping how we save, spend, and think about money on a global scale.